from Cafe Rio. So I love to start all of our trainings and such off with getting to know each other, because I think in real estate the number one thing is relationships. So can I start from the back of the room and just introduce yourself? With your mouth full is totally fine. Just kidding. And then let us know which office you're in.
My name is Kathy Wright. I'm here at Signature at the top.
Southwest, awesome.
Tracy, I just saw this. Oh, sorry.
You can add, what else did you have?
I was just going to say, I've only been here for a couple of weeks.
Awesome, welcome. Welcome, welcome.
Tracy, and I've only been here for only 1 week.
Wow, here in the Southwest office also?
Yeah.
Welcome, awesome. All right, we'll go here.
Tommy Zukula, Bishop Roberts Group out of Southwest.
And how long have you been here?
I have been here a little over a year.
Little over a year. Well, welcome. I'm just kidding. Thank you for coming. All right, we'll go to the back.
I'm Sandra Morrissey. I'm with the Bartons team, and I've been here for almost a year.
1 year. So do you work out of the Green Valley office?
Green Valley office.
Green Valley, okay, awesome.
Giovanna, I work out of the Green Valley office with Todd.
Also with Barton Group. Awesome. And Tony, do you want to introduce yourself?
Yes, Tony Asquith.
Okay.
Currently having a latte.
All right, we'll go to the back row here. Gentlemen in
My
the,
name is Mark. Been in this office for a month. Came from Center 21.
wonderful, welcome, and I love your suit jacket. We'll go back this way. I'm going to mix it up just to keep everybody on their toes. Ralph.
Me. My name is Ralph. I am with Janet on summer.
You're with Janet? Awesome. How long have you been with Janet?
3 months.
3 months. Welcome. All right, and then Annie, are you here for the event also? Come on in, introduce yourself since you,
Annie,
we don't know which row you're going to sit in yet.
I'll sit up front.
Oh, awesome. And which office are you with?
Green Valley,
Green Valley. And how long have you been with Signature?
since 2015.
2015, so what is that, 6 years?
6 years?
6 years. I'm a good lender, I can do it by a calculator. All right, we'll go back to Ethel.
My name is Ethel Makasaki, and I've been here for like almost 2 years since September. Yeah,
2 years.
Since September, yes.
Wonderful, which office are you?
Right here.
Out of Southwest, great.
My name is Jeff. I'm about 2 years here with Signature out of the Southwest office.
Out of Southwest also, awesome.
I'm John Matsis. I moved to Signature about 2 months ago at the Summerlin office.
Wonderful, welcome.
Hi, it's Carla Del Cruz, and I'm with the Southwest office. I'm with the Bala team. I've been
Bala!
here over a year.
1 year, great.
Carrie with this office, moved here last July, so almost a year.
Almost a year. With Signature, not just with this office.
With
And you're part of the coaching program, right? Awesome, awesome. All right, we're gonna go this way.
Hi, I'm Gabby Dela Cruz with Prosperity Lending, and I usually work out of this office.
Southwest office.
I'm Myra Talley with Prosperity Lending, and I typically work out of the Green Valley office.
Go ahead.
Hi, I'm Haley. I'm actually Brandon's assistant, so I work on the Southwest office.
Wherever Brandon wants you to work is where he gets to work. Oh, Beta left. Tony is also part of Prosperity Lending, for those of you who don't know. He is in the Summerlin office primarily. He will part-time here on Wednesdays. Truly all of us can float around, so if you have clients that need to meet in any office,
He's hiding.
in any office, we're here to help you and your clients. So I'm really excited that you guys all came out. We we put together this, oh, look at that. Giving you guys a heads up on what our stuff is. So I've had a lot of comments, questions, and concerns around how we can grow our business. One of them is obviously in partnership with each other. As we go through this, it may be super quick that we go through a lot of the topics. If you want to set up a one-on-one with one of our loan officers, schedule it so we can dive deeper into any of the topics on here. So we're going to get started with some of the programs that we've launched this year. Some of them you may have already seen through the mortgage moments, but this really should be open for interaction, and so if you have any questions, I know as you're watching the mortgage moment, we try to keep it as short as possible. It takes us 52 times to do it, but it only lasts 1 minute. So if you have any questions regarding this, this is going to be the time to ask those questions. Okay, how many of you saw the doctor program? And you saw Jason? So we had a lot of requests for the first responders, right? These are really going to be our first responders. We do have down payment assistance also available for our first responders, but specific to our doctors, so medical professionals. So those would be your physicians, veterinarians, dentists, who have all received a medical, a doctorate, I think is what they call it. They will be able to take advantage of a 5% down payment program. There's really only one other lender in town, who is Bank of America. How many of you love to do loans with Bank of America? Right. So the reason I throw this out there is, if you're trying to market, right, and you're going to look to identify some first responders, this is going to be a great way to market this program. There's no mortgage insurance on here. The other great benefit on here is that you can, a lot of our doctors may have some student loans. You can actually omit the debts for the student loans. And we also have some doctors who are perhaps coming out of internship. You can actually use their new projected income as they go into residency. So a lot of great things out of this program. And again, we're going to go through a few programs. Really, it's to highlight those. Make sure that you sit down with one of us if you want to dive deeper into this and then get some marketing information. Any questions? Yeah.
Yes. Does this include physical therapists? They're doctors of physical therapy. Does this include them?
So it is technically getting a degree in doctor, so they haven't labeled physical therapy.
Yes.
They've only really identified dentist, medical obviously, and then veterinarian. But we can certainly
Because they are
see.
a doctor.
They are, yeah. They are. So I will actually double check that. Do you guys know the answer to that, if it is inclusive for physical therapy? I think that somebody else asked that question and it was no, but I will double check to get you the right answer on that.
Because I have a hot one.
You have a hot one?
Yeah.
Okay, awesome. Well, then I'll make sure to get that after we're out of here. We got one on the line, guys, and we'll be right back. All right, any other questions on this? Okay. So here's a flyer. We actually can produce this flyer. We can do any customized flyer. It can be co-branded with your lender and also with yourselves on here. You can highlight it in different ways if you're looking for, once we figure out physical therapist, but maybe it's going to be veterinarian or your dentist or anything like that. And so we can put together those flyers for you. And down payment assistance programs. How many of you have buyers who need some money for down payment? Okay, how many of you have heard of Home is Possible and Home at Last? How many of you are signed up for that? Okay, just a few. So I'm going to bring Myra up here. She's going to talk a little bit about Home is Possible. Let me see this one. Give it up for Myra! I got to figure out how to move. Oh, there you go.
All right, so most of you have already heard of this program before, Home is Possible. These are all the different options that are available for the program specifically. So they have an option, which would be this first one up here. This is specifically for first-time home buyers. So the biggest difference, they have to have a 660 credit score for this option. But two, if you look at the interest rate here, they get 4% in down payment assistance for 3.75. Where somebody who is not a first-time home buyer, 4% in down payment assistance, their interest rate would be 4.375. So that's the biggest difference that you're going to see on this first-time home buyer program versus just a traditional. The one thing with the home buyer first time, they do have to have a lower income. So I want to say it's like 60 to 70,000 for a two-person household income, where this one pushes it up to 105,000. Conventional, as of right now, they still offer this income of 105,000 and above. Just know that that's actually going to change on a day-to-day basis. So it may be available today, but it's not available tomorrow. So if you have somebody conventional financing looking for down payment assistance, just let us know, because they have to be in contract and ready to lock in order to secure that, just to make sure that it is available. There's VA options. There's where they get below market interest rates. So that's available for VA and teachers. So this interest rate, 2.75, which is awesome. With the teachers program, they get $7,500 towards their down payment and or closing cost. With VA, they have two options. So one, they can get this below market interest rate, do zero down because nothing is required, so they would get no down payment assistance. However, if a VA wanted to purchase a home but didn't have money for closing costs, we can technically do this option up here, 3.625 interest rate, and then they would get 3% towards their closing costs, so they can literally go into this home with little money down. The other thing as well, right now with the market being so tricky, buyers, they don't have the money to put it over list price or anything like that. So if a buyer has 3% and 3.5% for their down payment, 3% estimated for their closing costs, they use this, they can technically now, compete in the market, especially with your FHA buyers, VA buyers. This is definitely a tool that can be useful right now, just because of the market that we're in. Did you guys have any questions on this specific programs of down payment assistance?
I mean, these, doesn't matter what zip code, correct?
Yeah, right. This doesn't matter. It's just in Clark County. 640 would be the minimum credit score. If they have a 680 or above, it allows us to push their debt to income ratio. So if somebody has a 640, the maximum debt to income ratio they can have is 45%. If they have a 680 and above, that would actually allow us to push their debt to income ratio to 50%. So that, can add a little bit more buying power to them purchasing a home.
You said 46%?
45% debt to income ratio.
Okay.
So I have a question.
Mhm.
So if somebody has money set aside in their savings account, is there a certain point where it disqualifies them
No.
for the down payment?
Yeah, no assets disqualify them. They can have as much as they want.
So because even if they have the extra 3.5% down payment, that's not going to get their offer accepted in this market. I mean, we know that you have to go 10% more over the asking price. So I'm just curious.
Yeah, well,
How
it
much
just,
money can
they can have anything in savings. So there's no amount of savings that's going to disqualify them for the program, but it's going to be those certain offers where maybe $5,000 is going to do the trick. Obviously, it's not going to be for every single home where that's going to happen, but there's going to be some offers that if they, list price be $295 and they offer $300, they may have a great chance at getting that accepted. And if they only had enough for down payment and enough for closing costs, using these additional funds can make that difference. Just kind of get creative. So obviously that's not what this program is designed for. It's just to help them with their down payment. But if they have those extra funds, it can help and make a difference for that. Any other questions on this? No? All right.
I think I put home at last next to.
That's right. So this is Home is Possible. Home at Last is going to be very similar. It's almost like they mirror each other. With Home at Last, this one is area specific. So we would have to plug in the property address with the zip code, and it tells us whether it's going to be covered or not with Home at Last. With Home at Last, I want to say they have a little bit, they go up to 125, right? Their income restriction as max they can do, where Home is Possible is 105. Home at Last will actually allow us to push their income to 125, that their annual income.
Is that like a USDA?
Yes, it is. Some of those areas, those zip codes, would apply to this. But same thing, depending on how much assistance they get, it's going to determine what their actual interest rate would be. Both of these have where they have to live in the home for a certain amount of time in order for the grant to be fully forgiven.
So on your previous slide, you had 3 years, so that's a minimum number of years the homeowner must stay in the house?
Yes, so they must live in that home for a minimum of 3 years, with the exception of the teachers program. That one is actually 5 years, but it is prorated. So let's just say they get $5,000 in down payment assistance. They live in the home for a year and a half. $2,500 has already been forgiven. So if they sell at that point, they would only be responsible for paying $2,500. And so what they do is divide the total amount they receive by 36 months. So each month, a portion of that money is forgiven. Anything else? Nothing?
All right.
Thank you.
Thank you.
You're welcome.
All right, so moving to the parent loan. So we actually I think we're in contract on one now. Yes, Ethel. So I wanted to make sure we go in depth on this. So the parent loan is an opportunity for you to purchase for your parents. So, and also we have a kitty condo loan. That's actually FHA, but for the conventional side of it, it allows for minimum down payment, so 5% financing, conventional financing, which would take you all the way up to the $548,250 for the loan amount. But the only thing that has to happen is that your parent has to be on the deed, but you, as their child, would be purchasing the loan for them on their behalf, ultimately. So, I actually, what brought that to light was we had a client who was looking at purchasing as an investment property. Getting further into the conversation for them was they were looking at purchasing it for their parents to live in. And so understanding that allowed us to find that we have this program, which is for conventional financing, Freddie and Fannie, that'll allow for the 5% down payment. So as you're hearing, I know Next Gen is a big deal, but there's also some people who are looking to have their families move out here or their parents move out here. It is solely for parents, specific to the conventional loan. There's also a what we call a kitty condo. So back in the days, they used to call this kitty condo for FHA. What this purpose would be to serve kids who are going away to college, right? And the parents want to, instead of putting them into housing, student housing, they would actually be purchasing a home or a condo for them in the area, utilizing the 3.5% down payment FHA financing. The child actually takes occupancy, and so they are not on the loan. They are actually on the loan. Sorry. So they are part of the loan, but they don't have to have any income. The parents solely qualify for the program, but because they take occupancy, they can do 3.5% down. So for us, that's called kitty condo. It's technically a loan to help your kids purchase a home. Doesn't mean that they have to be, in school or whatever. It would ultimately be that they're non-occupant co-bar, but that is your kitty condo loan. But they don't have to have any income. Any question on that at all? Or questions?
It doesn't have to be a condo, though. It can be
No. It's just the old verbiage of what it used to be because they buy condos in the area for housing.
I have a quick question.
Yeah.
Are there, what are the minimum credit scores and stuff for both of these types of loans?
So for conventional, it follows exactly the same guidelines for conventional. So the only thing would be the kids would have to, they have to be able to qualify for both payments. So although the parents are going to be moving into the home, it's not as though you can use their income unless they go on to the loan with them, but that's basically a non-occupant co-borrower. But the child has to have the ability to make the mortgage payment for both their current residence as well as their parents' loan. Great question. And then also for the FHA, so the parents qualify basically for both mortgages. Perfect. Any other questions on this? No? All right. I don't know why this is not. Okay. So I had a conversation, I think it was with Todd actually. We talked about 100% VA jumbo loan. So how many of you know that you can go 100% all the way up to like $2 million on VA financing? So in 2020, they lifted the maximum loan limit for VA financing. So you can technically go all the way up to, some of our investors will go $2 million. We have one investor that will go up to $3 million at 100% financing. So what that means is if your buyer has zero entitlement out, he doesn't own another home, he doesn't have anything that's owed back to VA, they can actually take advantage of a zero down payment, no mortgage insurance, over $548,250. So I just wanted to make sure that we can share that with you and you guys see that. And that also follows suit with like minimum credit scores, so 620. You can do a 580, but not in the jumbo world for VA. But 620, 100% financing VA loan up to $3 million. Any questions on that? No? It's not working. All right, I keep running in. I also wanted to share with you, so right now with the pandemic, everything that had gone away was, jumbo loans was the first investor or program to go away. They've come back, 20% down jumbo financing is out there. We actually have a couple investors that will do 10% jumbo financing, so I want to make sure that you guys are aware of that. Again, anything over $548,250 is going to put you into a jumbo financing. The other thing I want to share with you is going to be our combo loan. How many of you remember like the 80-10-10s? Or maybe 80-20s? This is not an 80-20, but this is an 80-10-10. So I wanted to share this. So here's an example here. Just your traditional 10% down payment. Sales price of $900,000. Loan amount would be $810,000. Your principal and interest, so it doesn't include taxes and insurance, but this does include mortgage insurance, would be $3,751. Then if you look over here, actually here's your jumbo financing. So you have a borrower who is either active military or veteran. Same setup, $900,000, 100% financing, $900,000 for loan amount. No mortgage insurance, but you're going to have a payment of $3,916. That's going to be your loan amount, basically. Then this is your combo loan. So you have a 10% down payment. So the buyer's only coming in with $90,000. In this example here, I've set the loan to be conforming loan limit, $548,250. So that's their principal and interest payment here. Again, remember, no taxes and insurance. They're going to take a second, which is going to basically be up to that 90% loan to value of the $900,000, and that amount is going to be $261,750. So the benefit here is that they qualify for conforming loan amounts and even program guidelines. They take the second here at $261,750. Their total payment is going to be $3,657. Where I see this to be a huge opportunity for our buyers today is if you have somebody who is potentially looking to sell their home, but maybe they can qualify with both. They know that they're going to get this amount of money or more once they get net proceeds. They're going to go ahead and take advantage of doing this second because their first would be $548,250 rather than just putting 10% down and having this loan here. You could always, does that make sense here on the 80-10-10? So it doesn't have to be $548, but this allows our clients who are in the higher price ranges to be able to take advantage of your conforming loan limits. The second also is beneficial if you have somebody who's high bonus earner or high commission earner, and they want to take advantage of knowing that they're going to be paying this down in a short period of time. And so then their first payment, you go from a $3,600 payment down to a $2,300 payment, either when they sell the home, put the net proceeds to that second, or they have those bonuses and additional payments down. Any questions on this? No?
Shelley, I don't get it.
You don't get it? Okay, thank you for saying that though.
I'm not smart with math.
Me neither. Okay, I actually just put this up using a calculator. Okay.
I don't get it.
So if you take, it's from $900,000, if you take a 10% down payment, what is that loan amount? $810, right? Okay, so you take $810 minus $548,250. That difference, hopefully if I did my math right, is $261,750. So we're going to set the first loan. Don't disregard the 80-10-10 because the number is not necessarily.
The down payment is still the same.
It is, yeah. Yeah, so your down payment amount here is $90,000. Your down payment amount here is also $90,000. Main benefit here though is, in this particular case, you have a buyer who has to qualify for jumbo financing, which is a little bit, because it's jumbo, it's a little more conservative, they're a little bit higher risk. Here, they can take advantage of a conforming loan amount, a little bit more flexible guidelines, right? Our traditional conventional financing. The second aspect of it is also, they aren't as strict as a jumbo loan, but they have the ability to basically still put the 10% down and get a little bit lower of a payment. Usually we'll put our clients into this if they have motivation to pay off this second, whether it's through net proceeds, whether it's through bonus opportunity. But you can structure this, the point of this is that you can structure this to be a combo loan, a first and a second, so that the clients can come in with ultimately the same amount of money here and still purchase $900,000.
Shelley, the debt to income ratio, is it the same for both? Or you're
No, this is a little more conservative. Yeah, so this is a little more conservative, this is a little bit more flexible. So here for our jumbo clients, they're usually limited to about 38%, 40 if they have really high credit scores. Specific to this program, it's a 38% debt to income ratio. Here you can go to 45.
But still with the $900,000
Sales price. Yeah, sales price. Yeah.
Okay.
And down payment, $90,000 down payment in this case. Really, I just wanted to throw this out there so you guys knew that there's an ability to have the second mortgages, because I think everybody just thinks if you don't have a way to do a 10%, you're pretty much not able to do the loan. So, any other questions on this? Great question, thanks, Gary.
Shelley, is the second lien on that like a HELOC?
It is. Yeah, so it's a home equity line of credit, interest only, so it is a variable. It is set at a margin depending upon credit score. And so depending on where the prime rate and that margin is, it could vary for the client. One benefit obviously is if you have somebody who's looking to do principal reduction on it, they can actually pay it down. If there's no balance, they can keep it open, and then it ends up being just like a revolving line of credit for them.
That's the other benefit, is if they pay $100,000 off,
They
they have
still-
$100,000 available.
Yeah, for sure.
And is that actually principal and interest, or is that interest only then?
This here is an interest-only payment. This is principal and interest.
Yeah.
Yeah, that should say IO, sorry. Great questions.
So once the HELOC, let's say you get the HELOC down to $100,000, whatever.
Uh-huh.
Can you re-enter and like put a pool in and then bring it back up?
Yeah, so that is one of the, I mean, I always think of a home equity line of credit as like a credit card, right? It's a
Yeah.
revolving line of credit. So as you pay this down, as long as, making payments on time and there's no change to this initial draw.
Right.
So you pay 100,000, you still have 261, you have 61,
Right.
yeah, you'll have that 100,000 basically as flexibility for you to use to use it as you want to.
What's the term on that?
It's a 10-year interest-only period, and then it flips into a fixed 20-year after that. And we do offer, when you do it in conjunction even with a refinance, we have a lot of clients who are refinancing into a lower interest rate on the first, and they're taking advantage of a standalone second. I think there were some questions out there on the agents of signature as well that asked about HELOCs. The hard part is this has to be attached to or done right after one of our loans. Otherwise, it's considered a standalone. And so those typically go to like a bank. I think, are you referring them out to anybody? Nevada State Bank has been one that I've heard of that's doing just traditional home equity line of credit, and I think credit unions.
One other question.
Yeah.
In the crash, if you had a HELOC, some of the banks called.
They froze them.
Well, they called.
Yeah.
They called, yeah. So is that recession proof?
It's not, I mean, I don't think anything in life is recession proof.
So there's still that risk.
Of course, I mean, even with our programs, right? Because the program this program wasn't even available during the pandemic. They pulled away even from doing jumbo financing altogether. So, yeah, I mean, I would say that could be a risk, of course, is that you put this on there and they freeze it. Any other questions on this?
Shelley, if they freeze it, that doesn't mean they call it due. That means that you just can't spend any more than that.
Correct, yeah.
Oh, because during the crash, they called the loan.
I don't know that they called them due. They froze a lot of the lines. And for some of us, I was one of them. So I think you paid it down and all of a sudden you just had no access to that, excess equity, so. All right, great questions on this. Buy now, sell later. So I'm gonna have Gabby come up here and talk about the cross collateral program. Give it up for Gabby!
Thank you. Is anybody familiar with cross collateral? So basically what this program does, it allows you guys to write your offers not being contingent. So if you have a home or a borrower that has a home that, hey, I want to buy another home, but I'm not quite ready to move because, I don't want to have to deal with moving right when the other person buys. This one gives you the option to, sorry, it's okay. So it gives you the option to use the collateral that you have on your home. So let's say that you have equity in your home. Let's say you have, you bought at $200,000 and now you have, $400,000 because you bought it a while ago. We can use the equity in the home as your down payment. So before you sell your house, what they do is they take the equity. We do have to have two appraisals, one for the one that you're buying and then one for the one that you're selling. They take the equity from there, they would apply it to the new loan, so you wouldn't have to come up with the down payment. Now, it depends on how much equity you have. There's still scenarios where you would have to come in with funds to close. But if you have enough equity, it covers the down payment and can cover your closing cost. We don't count both payments against you, so it's only going to count the one that you're purchasing. And then your debt to income ratio does have to stay at a 43. The rate as of today was 3.125. What they do is they tack on a quarter point to the rate, so you're at 3.375. Once you sell the other home, they recast the loan, they apply the 20%, so you're not going to have mortgage insurance either. They apply the 20%, and then they take off that quarter point that you were paying.
So in this program, you need to have enough equity to do a 20% down payment, is that correct?
Correct. So there is a worksheet that you have to, that we use to calculate that. And again, it's all going to be based also on the appraised value. So once we have that, we can use this worksheet and it'll tell you exactly how much you would have to come up with. So I actually have an example. So I did one the other day, and the home that they were purchasing was going to be $1 million. The value that they had in their home was $631. That's the one that they're going to sell. Equal those two, you have 1.6. You take 75% of that, it gives you a certain amount, and then you deduct what they owe on the home. For them, they were going to still have to come out of pocket because their max loan amount was going to be $907,250. So they would still have to come up with $92,000 of their own funds. Once the home closes on the one that they're selling, then the rest of that 20% would be applied. There's no time frame
So the
either.
$92,000 has to be available then?
For that specific, yeah, for that specific scenario. But there's some cases where maybe it's the same buyer, they were looking at $600,000, their home's worth $631. So now your entire down payment is covered, and even some of the closing costs is going to be covered. Not the full amount, but some of it. Any questions?
Do you have to keep the loan long? So what if their house is selling for 600 here, they're gonna buy 400? Can they pay it off, or do you gotta keep it for?
No, there's no prepayment penalty, so you can definitely pay it off at any time. If you don't want to just do the 20%, you can do 50% down, doesn't matter, or like you're saying, you can pay it off, there's no prepayment penalty, so it doesn't matter.
That last slide at the bottom, it said sell or rent the home.
So technically, you're not supposed to rent the home. So there's no time frame as to when you have to sell the home. At some point you sell it, right? Because you want to make sure that that 20% is put towards that new loan. But there's no time frame. You can have the home for a year. I mean, maybe you don't even put it on the market for another year because, you know, you don't have to. So you still have to make both payments, of course. But yeah, there's no time frame as to when you have to sell.
So you'll have to qualify for both payments?
No, you don't. So we don't, the home that you're selling, that is not included in your debt to income ratio. So you only qualify for your existing debt and the new home that you're buying. Your ratios do have to stay at a 43, so they're a little conservative, but we're not going to count both payments.
It almost sounds like interest only stated.
It's not. It's not. We've actually done a few of these loans. They're super convenient. Again, if you have offers that you're putting in, nobody wants to see a contingent offer, right? Nobody's going to accept that. So you can put this one and it's not contingent. So it's actually very beneficial. And again, the rates are super competitive, right? As of today, it's 3.125 after you recast the loan. So. Any other questions?
Great job.
Thank you, good job.
So I did my numbers on this. She did hers on her, that she said on $1 million. So just to show you, this is based on a purchase price of $500,000. So the client today, their current home is $400,000. Remember how Gabby mentioned you add both of them together, appraised value, so you get two appraisals. She took 75% of her million, but 75% of that leads you to $675. Then you subtract their current balance, which is $200,000. So in this case, what we could lend on would be $475. So obviously that compared to the current home, they're going to have a down payment amount of $25,000. But one benefit here is this $25,000 is 5% down. We're not counting the other debt against the client, right? We're typically on a traditional conventional loan, If they keep that home, we have to count the payment, right? So even though they're putting 5% down in this particular case, you omit the debt, and then as she said, they'll recast once the home has been paid off. They can take this difference and basically apply it to that new mortgage once they've sold this home. And then in this particular case where you have a little bit higher value, so the client they own the home free and clear. And so you have the same home, same situation, 500,000, value of the home is 400, you have a 900,000, 675 again, but no balance on their current mortgage. So they have 675,000 that they can play with. So where Gabby was mentioning that you can even include closing costs, this would be a perfect example where you could have a 0 down payment and you include the closing costs, because what we would allow for financing would be the 675 and the sales price is 500,000. Does that make sense? Yes? Okay, great job.
So
Thanks.
Kelly, do you have to have a higher credit score for this?
What did we say the credit score?
So ideally, it's going to be 740. When you start to go a little bit lower, you can still do it, but they tack on 1/8 of a point for the rate.
The rate changes.
Mm-hmm.
But I know, we're hearing a lot that you have a hard time, right, with your clients who are wanting to find a new home before they sell their home. This would be a great program for that. And the biggest thing is the value piece on there, right, is that they have some equity in that current home so that it makes it so that they come in with less money.
So they don't have to rent after selling.
You don't have to do rent backs or anything. Yeah, this truly is just a new sale. We don't really do anything with their current home. It's not contingent, as Gabby had mentioned. All right, private lending division. Have you guys heard of hard money loans? Okay, so I know we seem to forget, I even forget myself, so I took some examples of what our private lending division has done recently, and so I just wanted to go through that. So this is one that I think is actually a signature agent. So the client they had one home. For some reason, the home was built on 2 separate parcels. They were with another lender, they couldn't get it done. We actually were able to get it done through private lending, where they allowed for that one home and whatever else was on the other parcel to basically be one home purchase. We do non-warrantable condos. I've had some questions also about Palms Place, I think it is. So this is acceptable for that type of financing. Private lending division is going to be an opportunity for a client to get in. So think about that, because the rate is going to be a little bit higher, generally between 7.99 to like 9%, 30% down at a minimum. But it positions our clients to get into a home today and then put them in position to refinance down the road, right? When things should shift for them. Obviously for this home and this home, this is going to be specific to the property. We also do Foreign National. We've had some interest in Foreign National at that same 30% down. We recently did a 30% down payment with a 662, and we used 6 months of bank statements to qualify that self-employed borrower. We have a 12 months out of bankruptcy. So I know a lot of lenders want at least a couple years out of bankruptcy. They did a 12 months and the credit score was 603. That again, a 30% down payment. We do 12 months bank statement programs. That is actually something that private lending does all the time. They did a cash out, 65% cash out refinance on a 607 FICO score for an investment property. So how many of you have investors today that would like to pull their cash out, but because they have really maybe not so great credit, but they have the ability to take these loans, basically cash out and purchase another home? How great would that be? And then we also have, so for FHA financing, if you put 10% down, you can qualify for, you have to have a minimum credit score of 560. They did this one conventional financing because it was in the, I think it was like 510,000, 30% down with a 577 credit score. Most conventional financing, we cannot go any lower than 620 for your traditional conventional loans. And we were able to get that done through our private lending division. So my point to this is not to tell you, hey, take one of these bullets and find a client for it, but really to open up your imagination on if you do have clients who have to fit into a certain box, run it by one of our prosperity lending loan officers, because we will have the opportunity to at least send it into private lending division and just forewarn your clients, like, listen, it's not the best, it's not going to be the best scenario as far as rate, down payment, but it gets you into the home today, and then we work on getting you into your more traditional financing as you refinance.
How soon can you refinance?
There's no prepayment penalty. Actually, I think depending on if you're an investor, there is a prepayment penalty on the investment loans. But all the other owner occupies, there's no prepayment penalty. Todd?
think the misnomer out is that private money is 10 to 12 to 15% interest, but many of these are well below that, right?
It is. So I know that 7.99% were probably on majority. I think this one was 8.99. They're all 30% down. That I do know. Is that me? Okay. Any questions at all on this?
Shirley, do you guys do reverse mortgages?
We do them, but I mean, truthfully, I refer mine out because I think it's somebody who has to specialize in them, but we do offer reverse mortgages. Yeah. All right, renovation and construction loans. So I wanted to provide this because I'm seeing a lot of clients today who are, getting frustrated with new construction, getting frustrated with the market, and so they are asking about how they can just go ahead and build their own home. And so to share with you what that looks like, renovation. Okay, let me jump back to renovation loans. So if you have a client right now with a limited inventory, how many what do we have on inventory today? How many homes?
2.
2,000?
2,500.
2,500, okay, whatever the number is. So how many of your clients are like walking into these homes and they're like, this is exactly what I was looking for? Yeah, okay, so this 203K is exactly what the program is designed for those clients who can take a home and see the good structure in it and see great paint, maybe new cabinets, maybe new flooring. They can utilize that up to $35,000 in basically a renovation, and that is called a 203K. That is specific to FHA financing, so you will be limited to a maximum loan amount of $362,250. But it will allow our buyers with limited inventory today, right, to find their home of the dream, find their home and make it their dream home. You can also do a full 203K renovation loan. So that is like literally studs up. It's again capped at $362,250, but it's not limited to the amount of renovation. So truly, they say if the foundation is good, you can do a 203K full-blown renovation loan on that. Yeah.
So I recently had a closing that fits this criteria. That was probably their loan. It was a $375,000 house, FHA, so their loan amount was probably about that. Could they apply for this loan? They already have their FHA loan, they just closed on it.
Yeah, so we could actually do a refinance as a streamline. So if you have a client who wants to utilize it for changing of their carpets or whatever, paint and stuff like that, you can do that. The streamline is a cosmetic type renovation.
Because they are going to renovate, but I haven't asked, I didn't ask them how they're going to pay for it, so.
Yeah, or they could do an equity line of credit if there's actually, at 3.5% down, I don't know how much equity they have today, but they could absolutely do this. So the only thing would be, because they're in a current FHA today, they have to wait at least till they make their 6th payment in order for them to qualify for another refinance to do FHA. Great question though. We also have VA 100% renovation loan, so that's going to be limited to your 548,250, but you can do renovation very similar to the full-blown renovation for FHA. And then you have, I'll show you on the next screen that we have the one-time close for VA financing as well. And then for conventional, we have the home style loan, which is the 5% down payment on your purchase. So very similar concept where you have a client who is, maybe not in love with the home because of what it looks like today, but could see what it would look like if they changed some things inside of the home. The conventional side will pull you all the way up to the 548,250 loan amount with 5% down. Any questions on this? Yes, Todd. That's okay.
So on these types of loans, it's anything cosmetic. What about appliances though?
Appliances actually count for, you can do that in 203K. Yeah, because it would be really considered energy efficient. Yeah, so that would change that in an older home. This here, the full renovation is literally, it's foundation. If you just have foundation, you can build on it. Or not build, you can renovate. That's a full renovation loan though. This one takes, well the cool part about all of these actually is that, so we will set aside whatever the options are, what you want, the renovation amounts, the bids would be. You set the acquisition cost, we close on the purchase, you all would get paid. The buyer it still has to be habitable except for the renovation. The buyer would move in, do their renovations, and then they ultimately, we close on the loan, everybody gets paid, and then they can do the renovations within a 6-month period of time. I would say give yourself about 45 to 60 days on a close of escrow though for this, just because it requires them to go and figure out what they want, you know, for countertops, paint and stuff like that, and that has to be included in our appraisal. Any questions on this? All right, so the construction loan. So we have a few that are in for land buys right now that have completed their lot loans. They're in the process of doing a construction loan. The reason I put both of these on here is you can do this in this process. So you can go and find a land, or you can go find land, and that purchase would be a land loan. The client would come in with 30% down. They close on the land loan. A lot of clients are not ready to go forward with construction because they have no idea what they're going to build. And so they have to go through the plans, they have to kind of get things ready as far as permits and such on that specific land. We'll then put them into a construction loan, which rolls their land loan into this one loan, a construction loan. The construction financing on it is going to be 20% of the total appraised value or acquisition, or what it costs to build, basically. So if they put 30% down on the land, and now we're going to put them into a construction loan, typically this amount is going to be lower for the construction loan of what they have to come down. The 30% down payment would actually count for this 20%. This gives them the time to go and figure out what they're going to build. In this particular case where you have an all-in-one, they ultimately are finding the land, they know what they're going to build on it, they pretty much have all the plans ready, they have to go through permitting, and so you do a one-time construction loan based on conventional financing, and VA is 100% financing. Right now we have most of our clients going through this process here, because we have 3 that are in land loans right now. They're still going through the process of figuring out what they want to build. But it is out there. How many of you have seen land right now? I mean, the land is not moving as fast, or it hasn't appreciated as much as our homes have. So they're taking advantage of actually I've seen a couple that are in for $250 for lot loans, and their construction is going to be right about $400,000, and so they're getting in even less than they would going through new construction.
Is there any time limit on the land loan? Remember, we have to build.
The land loan is 2 years, and then construction is, once you're into construction, is 12 months to 18, depending on price point. Any questions on this? Bill? No? Okay. All right, so now we're going to move into our marketing aspect of it. So I know many of you had said that you have signed up for Home at Last. This is Home is Possible. As you go in here, you can click into this site. I'd encourage all of you guys to sign up for this free marketing database, really. You'll also have access to the flyers. I'm still getting at least one a quarter, a lead from Home is Possible, just from being on here. So, I mean, it's free marketing, right? And so it's also a database where people are just going through here. There's a site for borrowers to go in and find a realtor. Sometimes it's specific to, a certain area. But if you go on here, you can actually take a course. It's like 30 minutes, and then it gets you signed up for their database. Let's see. And then on Home at Last, you can also go through here. Same thing. This is the one that's specific to certain areas of town. You get the certification and, where do we go here? Sign up here to do the university, and that will actually allow you to get also that same marketing and such. Did I just mess that up? Sorry, Beta. Let's see. Prison. How many of you have signed up for Home at Last or Home is Possible? Have you gotten any leads? Anybody gotten a lead from it? Not yet? How long have you been? Because I've been on it so usually what will happen is a buyer will just call. I mean, truly, like, hey, I've been trying to call somebody. They're dialing for somebody to pick up the phone. And then it becomes an active opportunity. And they also have writers, and they have marketing flyers and such. How many of you have list reports? Just a few. Okay. So this is actually a free marketing tool. This is the number 2 tool for us. All right, I'm going to take you through some slides. So this is what list reports looks like from the outside. So you'll see here you've got your marketing kits. You also have some infographics. this is a nice slide if you're, actually this is what it looks like on social media. You also have your riders here. Uh-oh. Man, I'm not. Here it goes. What happened? Sorry, guys. Technical difficulties. Okay, here you go. Just show you what this is. So, the great thing about this is you have, how many of you love to do social media posts? How many of you love to put your content together? It's always hard, right? So this gives you a daily social media post, honestly. You just, if you like, I think they do it like 3 days running. So they'll put the actual picture up, they'll give you the caption, they'll give you the hashtags. All you literally have to do is download it, copy the caption, and then push it out to Facebook or to Instagram. How easy is that? So, I mean, you may not want to do it every single day, but you can. But it gives you the access you have, so it's easy for you to do and something that if you need content, you can jump back in here and get it. I love the daily email. So there's a lot of great information on here. One, it talks a lot about the national stuff that's going on, national news, but there's also some great YouTube content in there so that you can help grow your business. It talks a little bit about all aspects, mindset, marketing, and then also what they offer through list reports. So I usually have this as one of my like daily things to look at is the email. So once you're signed up for this, you'll get the daily email, they'll send you the social media site, and then as you go through it, you'll have the lead gen information so you can share all of this stuff to social media. So even if you're just wanting to put out a lead gen link, you'll have that. The marketing kits are great for your listings as well as if you're looking to do like an open house or you want to showcase another home that's not necessarily your listing. You easily go in there, type in the property address. Actually, I think Tane had one yesterday, right? He's doing an open house for one of Roya's homes. And so you just went in there, pulled in the property address, right? And it links in your profile. So it links in his profile and now he has flyers that are customized specific to a home that you're doing an open house on.
It's automatic, right? Once you put your listing in, it just sends it out?
Yeah, so that great point, Bill. So we get it when you're attached to a lender, but you also get it. It usually takes about 15 minutes from the moment it's actually into the MLS. So again, this is a free tool, right? You can also get a single property website. It gives you all of the different marketing kits here that you can see. The infographics, it gives you, if you're doing the open houses, you can do the list writer or the writers on here. But it is something that's automatically populated, so you don't even have to really think about it. Yeah.
And did I just hear you say that an agent could go in and use somebody else's listing and the buyer would have their information on it?
Yes, so it also, you obviously have to get permission, but it does say listing presented by, or provided by, but it does show you as, it's all of your content, all of your branding information. Yeah, so in that example for Tani. It's super expensive?
It's free.
Oh, yeah. It's free. I was like, Todd, I'm not sure. Maybe we need a hookup because ours is free. So the list packs is kind of cool. So I know you guys have a way through MLS that you can send out specific things, but this gives you a really pretty option where if you want to showcase like all the homes here in Las Vegas because it's getting hot that have pools in a specific zip code or maybe in a specific subdivision, or you only have borrowers that want a 2-story or a single story or only want to live in a specific subdivision, you can pack them up as one and then you can just share this. Or even if you're looking at just market for lead gen and you're like, hey, summer's is right around the corner, check out all of the homes that are available that have pools in them in the Henderson area or Summerlin area. All right. You've got the property search, and this is basically what your clients actually see. So they can go in here and see what's available as you set it up for them specifically. This is also another CRM opportunity for you. For those of you who don't have an active CRM today, it will pull all of your clients in and you'll have a lead area. The daily list reports, your shareables.
And does that automatically come back to you guys too? So this says, hey, this person has a new listing.
It'll actually go to you. So this will be your, I don't think it comes to us as does it as a lender? I don't get any leads from my realtors. What's the deal with that? Just kidding. So it goes back to the lender as well as the agent attached.
Well, I believe so, yeah.
Yeah.
I get notifications anytime that there's one listed on there.
As it's been listed. But you're talking about lead, right? If somebody comes
Or
through as a
either,
lead.
does the lender get it to the no pay that's going up?
I know that we're attached to your database, but I don't know that we have, I don't think we get the lead. I think it's just
No,
your,
it just gets notification that like someone has listed it, that's it.
yeah. So the marketing kits that you have, we get notification of that. But if you send something out and a lead comes in, you're the only one that gets notification of it. It's technically your account. You're only bridged through us
Right.
because of the marketing kit. So I know that we all have this signature app, and so the aspect of doing face-to-face or Zoom calls, this is List Reports Live is also on here, but I know we're going to use our app, so I'm not gonna just brush through this pretty quick. And there's also some different deals on here too. So there's a lot of great things in here, not just the marketing kits and not just the shareables. So if you're not using if you are not set up or signed up for List Reports, just get with one of us and we can send you an invite so that you can, you'll get the invite and you can get started on that. I don't know what happened here. Okay. Any questions at all on List Reports? Okay. HomeBot. How many of you have heard of HomeBot? How many of you have HomeBot? No. Okay. So how many of you have a CRM? Awesome. So I love this as I have a main CRM that I use for like my content, but I use this specifically for, it honestly was for my previous database, but I've actually incorporated a farm. So how many of you farm specific areas in town? Neighborhoods? Okay, if you're not doing that, definitely talk to your brokers to get a farm area so that you can actually utilize this. So what I did was I went to Title. Do you guys have a good title partner?
Yes.
Okay. I went to Chicago Title. They gave me a list of a farm area that I was looking to basically refinance. I was trying to go in there to see if I have an opportunity to get some refinance loans or to help some buyers refinance their homes. So we brought them in here, you add them into the client area, whether they're a buyer or a homeowner. As new clients coming in, you can actually do this in a bulk sequence where you take templates and drop any of your database in here. The number one reason I love this is it stays in contact with our clients every month. So if the buyer is, if you have a homeowner today, so in your farm, if you're in your farm area, those that own those homes, and they opt in to get your email, they're going to get this monthly digest, which I think is very similar to eProperties, but which you get free through MLS, but it's not as interactive and intuitive. So what this looks like, this information here is actually, if you took advantage of HomeBot, this is branded with your information. Easy click-ins to either call or to email into you. So it shows them what their current value is. Now, I know a lot of agents are like, well, it might not be 100% accurate, but that's great, right? If a client actually sees this and says, hey, Carrie, my value is like actually $900,000. I think your HomeBot is wrong. Blame it on the bot. Just say, yeah, you're right. It's probably wrong. And then give yourself an opportunity to do a true CMA. But the opportunity for you is you have a connection, right? When the buyer is actually looking at this. A lot of times we can just prospect, call our clients. We're not necessarily knowing when they want to see this or when they are looking at this. But how much more impact is it when they've looked at this and you're seeing that they're questioning the value? You can actually, they'll click through here also if they have any questions on here. You can, if you download HomeBot and you download your database, every month you can actually go in here and do your own evaluation or do your own CMA, and then you can call the client and say, hey, I just want to let you know I actually personally went into your weekly or your monthly digest and I did an evaluation. Take a look at it. If you have any questions, give me a call back. So it shows you here, I mean, obviously in our current market, we're hot. As Tom would like to say, we're on fire. And so it's letting them know based on this that there's high demand and the pricing has gone up quickly. And so one thing that I think is cool on how to get more listings, taking a look at this, so it's going to show this specific borrower in the area that they're in. They can dive in here and ask more questions as far as what the appreciation has looked like over the last year, how much equity they have in their home, one more, what the demand of this market specific to their home area is. And then it also gives them opportunity to basically ask questions to you. So, and it's click, right? This is all just, hey, can you qualify me? Cool. Clicks over, I get the email. If it asks for like CMA questions, how much, or should I hold on to my house, it's going to ask basically what your CMA information is. So every time your clients go through this, and they click into this, you're going to get notification of it. So this is if you have a buyer, or sorry, if you have a homeowner. The other great thing about this is, which we've used for ourselves, you get to see what mortgages they have on their home. And so for us, right, if they took over a new mortgage, you could at least see what the rate is. So in this particular case, if rates are 3%, even for you as an agent, it could be a good opportunity to say, hey, have you thought about maybe refinancing? No, I'm not really going to refinance because I'm about to sell. Really? That's awesome. So you now have a client who's prepared to sell. But had you not seen this, you probably wouldn't have had that conversation and saying, maybe this is a good opportunity to provide value to your client. But this will also show you if they've got other mortgages. This shows you here this client refinanced, and he has a second on there. Any questions at all about this part of HomeBot? Okay.
Yeah, I have one question. So if you attach a form list to that, they have to accept the invitation stuff, right?
They do, yeah. Yeah, because it's an opt-in for them. Yeah, and obviously as you do other things, one other great thing that you could do, so in conjunction with HomeBot through CoreFact, how many of you have heard of CoreFact? Direct mailer. So they'll actually do a QR code on top of your direct mailer through CoreFact. I think there's actually a 10% discount today. So if you do have a farm area and you want to just throw this out there, it has the QR code. It'll ultimately pull them automatically in here. That's your opt-in as well. But it gives you the opportunity to also hit them with a different type of marketing, right? So you're now going into email, and now you're going into direct mailing. And it's the exact same CRM that it's going to go into, or lead gen it's going to go into. So you can also load your buyers in here, but obviously right now we're focusing a lot on our listings, right? And then your current clients that you have today. This has been an amazing tool just to see what activity. So I actually have some agents who didn't want to sign up on HomeBot. They are now signing up on HomeBot because I was able to tell them, hey, this client here went in and actually started to preview different areas of town. And so because of that activity, which I got to see, because here's what it looks like. Every day you get an update as to what's going on, how many were sent, how many were open, how many physically viewed. And then you can see the specific clients that actually viewed the home, when they viewed it. So like 2 minutes ago, this guy actually, did he message me right now? No, that was me messaging myself. Like, hold on, I gotta go make a phone call to Bruce Jaquez. So you can see when they actually view the home. In eProperty Watch, you can, the email goes out, but you don't ever see what how they're interacting with you. So imagine if you have, might be a little stalkerish, but still good to do. You imagine you see that Bruce Jaquez is texting me right now. Obviously, that's going to be something that you're going to want to respond to quickly. But Kareem, 5 hours ago, maybe you're not going to jump on the phone and say, hey, I saw that you were on your HomeBot, but maybe you're just sending in a friendly call to just say, just checking in, want to see how you're doing. Because he's obviously looking at something pertaining to real estate, right? Rather than just hanging out one day deciding that I'm going to make my prospecting calls from 9 to 10 o'clock, regardless of if he's wanting to hear from me. Does that make sense? And so this is one of the great reasons I love HomeBot. It is $25 a month. How many of you go and spend $25 a month on CRM? That's cheap, right? How many of you spend $25 a month at Starbucks? What if this can get you one deal, or have one more client pay attention, or you can engage with one more client because you know that they're actually looking at these things. Like I actually saw hers yesterday. I texted her this morning. We're going to set up for a refinance. So that's one reason I love HomeBot. Let me go back here.
Get that set up through you guys?
Yeah, we can send an invite. We'll send the exact same thing, an invite. You'll be able to go in here and set up your own profile. So sharing. So obviously all of this is about lead gen. HomeBot is #1 about lead gen. So you can plug this into your websites. Do you guys have your own websites? Simplest also has the ability to do that. So you can embed a widget You can embed a widget, and this is what it looks like. What's your home worth? You can also, if you're just wanting to add some social content, you can do that as well. So if you're looking for buyers or you're looking for homeowners. And then one other thing that I like about this, because I think it's important to know when people are not paying attention to you, is if you look here, you can see clients who have, here it goes, who have either unsubscribed or they've gone inactive. So sometimes it's even email. Maybe they've just changed their email address. But this is a great opportunity for you to also connect and say, you know, this person hasn't touched or hasn't seen this home bought in the last 7 months, so I called him. He actually moved out of town, so the address is wrong. So you have to update the information, right? So he's in Florida now. He doesn't own a home. So at least I know I was able to make a connection to find out why he's no longer using my home bot. So I think from that standpoint, to use HomeBot for $25 a month, truly it is, to me, has been one of the best marketing resources that I've used. This is $25 for your first 500 clients. Anything over that, every 100 after that is $10. Any questions at all about HomeBot? Yes?
Team version?
There's not. Yeah, that actually would be, that is not something I've seen, just individual. And that, okay. No questions on HomeBot? How many of you are going to sign up for HomeBot? Okay, good.
Can I just pay cash?
Yeah, pay cash. This is what it looks like from the consumer side. So you can drop the lead in. This is on a page, and then you also have the mobile aspect of it. The other thing that I think is pretty cool, so there's a way for your clients through here to share to to their family and friends. It literally says, if you think your friends and family would be interested in getting to know their value, please share this link. And so that is automatic generation for you, which is coming from a soft lead also, right? Or a warm lead coming from a past client. Okay, so I want to share with you guys, we're on the app. How many of you are using the Signature app? Everybody? Nobody? How? Are you on the Signature app? Everybody, okay. So Prosperity Lending, all of our loan officers are on the app. We've actually officially gone through one transaction through the app. It was really cool. So, and we're in process on several right now. So you can communicate right through the app. One of the best things about it, obviously for you guys, is that it's business related. I know sometimes people are like, well, you know, I can't, there's too many emails, whatever. This comes to us directly as a lender. We also then can attach our processors, our loan officer assistants. In this particular case, we added a loan officer assistant. She was able to communicate with the TC, title, and then the buyer, who was Brandon, and also our agent, who was Brandon. And so we went through the whole thing in communication directly through the app. He signed documents through there. He sent documents through there. It's 100% secured. And honestly, we got a faster return and response rate from that because we use the app. So if you guys will go in, and if you're working with a lender today, one of our Prosperity Lending loan officers, make sure that you tag them, get them included. And then also just know that we're on there so that we can start communicating with you through the app. And if you need us directly, this is our phone number information. And I'll send out the presentation for you. Any questions at all for any of us? What time are we at? No questions at all? No lending questions? Tane, you look like you have a question.
Can you send that info over to my email after, that whole slide?
Yeah, the whole slide?
Yeah.
Yes, I'm going to send you the video. Just
Do you
yeah.
have the buy now, sell later flyer?
Cross collateral. Do we have we have cross collateral?
Yeah.
Yeah.
Need a copy of that.
Yeah, sure. So do you use the app?
Which app?
The Signature app?
Yes.
So email or go in there and ask Gabby,
Okay.
and then she'll send it over to you. Any other questions? Nothing else?
Good job.
Thank you. Oh, so I did check on your physical therapist. It is not, they are not considered medical. Sorry. They do get a doctor, but they're not considered medical profession. But I'm sure we could do another loan for them in some other way. That's all I got. If you guys didn't get a chance to enjoy lunch, there's also drumsticks inside of, because it's getting hot in here, right? So So there's drumsticks for dessert, so you could take some home with you if you want, Todd. Do you know what those are, drumsticks? You're like, yes! Thank you guys for coming. Thank you.